This analysis covers 6 technical indicators that combine different approaches to market analysis: volume-based breakout detection, trend probability calculation, pattern recognition, multi-indicator confluence, and adaptive trend following, with supply and demand zone identification. Each indicator uses distinct methodologies, from tracking highest volume bars to analyzing momentum across multiple timeframes. The review examines their technical foundations, practical applications, strengths and limitations, with rankings based on effectiveness and reliability. Let's dive in. Volume bar breakout and breakdown. Created by IAD and Trading Sage, this indicator identifies the highest volume bar within a specified lookback period and displays its range as a key reference zone. The system continuously scans historical bars to locate the candle with maximum volume, then plots horizontal lines representing the high and low of that specific bar. This creates a dynamic range that updates whenever a new volume peak occurs within the observation window. The indicator employs volume-based breakout detection logic that combines price action with volume confirmation. It generates buy signals when price closes above the highest volume bar's high, accompanied by above-average volume that exceeds the previous bar's volume. Conversely, sell signals occur when price breaks below the volume bar's low, with similar volume and positioning criteria. The visual representation uses a filled area between the high and low of the maximum volume bar, creating a clear reference zone on the chart. Buy and sell signals appear as labeled shapes below and above bars respectively, offering clear entry point identification. The methodology assumes that bars with exceptional volume represent significant institutional activity or major market events, making their price ranges important for future support and resistance levels. The indicator tracks these key levels dynamically, adjusting as new volume spikes occur. The volume confirmation requirements help filter out weak breakouts that lack conviction. Traders utilize this tool for volume-based breakout strategies, focusing on areas where significant trading activity previously occurred. The approach works particularly well during earnings announcements, news events, or other catalysts that generate unusual volume spikes. Day traders can use shorter look-back periods for intraday volume peaks, while swing traders can extend the observation window for longer-term volume significance. Pros: volume-based level identification, dynamic range adaptation, institutional activity tracking. Cons: single level limitation, volume spike dependency, range update disruption. Ranking: 7.3 out of 10. The indicator provides a straightforward approach to volume-based support and resistance identification, while its focus on highest volume bars offers insight into institutional activity zones. The limitation to single levels and dependency on volume spikes restricts its comprehensive market analysis capabilities compared to multi-level volume profile systems. Fortuna Trend Predictor. Created by Fortuna, this indicator synthesizes multiple technical components into a probability-based trend prediction system. The core mechanism calculates trend probability using the relationship between short-term, 20-period, and long-term, 50-period, exponential moving averages, normalized by ATR to create a percentage-based trend strength measurement ranging from 0 to 100. The indicator processes EMA differential against ATR volatility to generate its primary probability line, which oscillates around the 50% midpoint. Values above 70 indicate strong trending conditions likely to persist, while readings below 30 suggest trend weakness or potential reversal scenarios. Supporting the main probability calculation, the system incorporates ADX for directional movement confirmation and includes volume filtering through average volume comparison. The ATR threshold mechanism identifies high volatility periods that may affect signal reliability, while RSI provides additional momentum context, though it appears primarily used for internal calculations rather than direct plotting. For strategy implementation, traders can use the 70-30 threshold levels for trend continuation trades, entering long positions when probability exceeds 70 with rising ADX confirmation. Conversely, probability readings below 30 with declining ADX may signal trend exhaustion or reversal opportunities. The indicator works effectively in trending markets, where EMA crossovers align with probability threshold breaches. Pros: probability quantification, multi-component synthesis, volatility normalization. Cons: EMA dependency limitation, threshold subjectivity, lag accumulation. Ranking: 7.5 out of 10. The indicator provides a mathematically sound approach to trend probability assessment through EMA-ATR relationships. While the probability framework offers clear interpretation guidelines, the heavy reliance on moving average crossovers introduces inherent lag that may reduce effectiveness in rapidly changing market conditions. Breakout Finder. Created by Lonesome the Blue, this indicator identifies breakout patterns through pivot point clustering analysis. The system tracks pivot highs and lows within defined periods, storing their values and locations in arrays for pattern recognition. It searches for situations where multiple pivot points cluster within a narrow price range, creating resistance or support zones that generate significant breakout signals when penetrated. The indicator employs a threshold-based approach to define clustering zones. For bullish breakouts, it searches for multiple pivot highs clustered near resistance levels that price subsequently breaks above. For bearish breakdowns, it identifies pivot low clusters that price breaks below with conviction. The detection logic requires specific conditions for signal generation. Bullish signals occur when a green candle closes above recent highs and breaks through a cluster of at least the minimum required pivot highs. The system ensures the opening price was below the breakout level, confirming genuine penetration rather than gap movements. Similar logic applies to bearish signals, requiring red candles that close below pivot low clusters with proper entry conditions. Visual representation uses rectangular zones. These zones highlight the price range where multiple tests occurred before the eventual breakout. The indicator includes customizable colors, line styles, and zone parameters. Traders utilize this tool for breakout trading strategies, identifying consolidation areas where multiple failed attempts create spring-loaded conditions for significant moves. Day traders can use shorter periods for intraday breakouts, while swing traders can extend parameters for longer-term pattern recognition. Pros: cluster validation methodology, false breakout filtering, historical pattern visualization. Cons: lagging signal generation, parameter sensitivity issues, limited time frame flexibility. Ranking: 7.8 out of 10. The indicator provides a systematic approach to breakout identification through pivot clustering analysis. While its validation methodology helps reduce false signals, the retrospective nature of pattern recognition and parameter dependencies limit its effectiveness for real-time trading decisions compared to more adaptive breakout systems. Predictor Intraday Trend. Created by Muthia M., this indicator combines multiple technical analysis components to predict intraday trend direction through a sophisticated signal generation system. The indicator integrates MACD, RSI, and Fisher transform calculations to produce both long and short signal predictions with visual confirmation through triangular markers. The system operates on a dual signal architecture where Predictor 01 and Predictor 02 represent different sensitivity levels or time frame perspectives. Each predictor generates both long signals, displayed as green upward triangles below bars, and short signals, shown as red downward triangles above bars. The indicator's foundation rests on MACD calculations. Combined with RSI analysis, the Fisher transform component adds another layer of signal processing with a 10-period calculation, creating a multi-dimensional approach to trend prediction. For strategy implementation, traders can use the dual predictor system for confluence trading, waiting for both Predictor 01 and Predictor 02 to align before entering positions. The system works particularly well in trending markets, where the combined technical indicators can capture momentum shifts early. Pros: multi-indicator confluence, dual prediction system, visual signal clarity. Cons: lag accumulation potential, choppy market vulnerability, parameter complexity. Ranking: 8.2 out of 10. The indicator demonstrates solid technical foundation by combining proven momentum oscillators with signal processing techniques. Its dual predictor approach adds confidence through confluence, though the multi-layered calculation may introduce lag in fast-moving markets. The visual presentation excels with clear triangle markers, making signal identification straightforward for intraday traders. Adaptive Trend Flow. Created by QuantAlgo, this indicator combines dual exponential moving averages with volatility-adjusted bands to create an adaptive trend-following system. The indicator calculates a basis line from fast and slow EMAs of typical price, then constructs upper and lower boundaries, using standard deviation, multiplied by a sensitivity factor to accommodate varying market volatility conditions. The core mechanism employs a state-based trend detection system that switches between bullish and bearish modes based on price interaction with the volatility bands. When price crosses above the upper band during a bearish trend, the system flips to bullish and tracks the lower band as the new trend level. Conversely, when price breaks below the lower band during bullish conditions, it switches to bearish mode and follows the upper band as resistance. The visualization features dynamic coloring, where the basis line and trend level change color based on current trend direction, complemented by gradient background intensity that strengthens as trends persist. For strategy implementation, traders can use crossovers of price with the adaptive trend level for entry signals, particularly effective in trending markets where the volatility bands help filter false breakouts. Customization options include main length, smoothing length, and sensitivity multiplier for the volatility bands. Visual settings allow control over bar coloring, background gradients, signal display, and custom bull-bear colors, enabling adaptation to different chart themes and personal preferences. Pros: volatility adaptation, state-based trend logic, comprehensive visualization. Cons: whipsaw vulnerability, parameter sensitivity, lag accumulation. Ranking: 8.3 out of 10. The indicator demonstrates solid technical foundation through its adaptive volatility approach and state-based trend detection. The comprehensive visualization package enhances usability, though the system may struggle with choppy markets where frequent band touches generate excessive signals, despite its volatility adjustment mechanism. Supply and Demand, MTF. Created by FluxChart, this indicator identifies supply and demand zones across multiple timeframes using momentum-based detection. The system analyzes consecutive candles with substantial body sizes to locate areas where institutional buying or selling pressure created significant price movements. The indicator employs sophisticated zone management through overlap detection and combination algorithms. When zones from different time frames intersect, it merges them into unified areas with enhanced visual prominence. This prevents chart clutter while preserving critical information about multi-timeframe confluence. The system maintains separate tracking for demand zones, areas of buying pressure, and supply zones, areas of selling pressure, with automatic invalidation when price breaks through established boundaries. Zone visualization adapts to market structure through dynamic sizing and transparency adjustments. Each zone displays its originating time frame, with combined zones showing multiple time frame labels. The indicator includes retest and break detection, marking when price returns to test previously established zones or definitively breaks through them. These events generate alerts and visual markers to highlight potential trading opportunities. The multi-timeframe capability allows simultaneous analysis across 3 different periods, from short-term scalping timeframes to longer-term structural levels. Users can customize momentum requirements, zone invalidation methods, wick-based or close-based, distance parameters, and visual styling. Traders utilize these zones for confluence analysis, combining multiple timeframe perspectives to identify high-probability reversal areas. The retest functionality helps confirm zone validity, while break detection signals potential trend continuation or reversal scenarios. The indicator serves swing traders seeking structural levels and day traders looking for intraday supply and demand imbalances. Pros: multi-timeframe confluence, automated zone combination, momentum-based validation. Cons: complex parameter optimization, Historical zone dependency. Momentum lag sensitivity. Ranking, 8.5 out of 10. The indicator provides comprehensive supply and demand analysis, with intelligent zone management across multiple timeframes. Its momentum-based approach offers objective zone identification, though the complexity of parameters and reliance on historical momentum patterns may challenge newer traders seeking straightforward implementation. Want to discover 5 powerful TradingView indicators that could enhance your trading? See our latest review here.